The United States government just sent $20 billion to bail out Argentina, with another $20 billion potentially on the way. There are two main reasons why the United States government did this, and no, it's not because of charity. Number one, it's a way to hurt China's relationship with Argentina. And number two, it's to indirectly, hopefully, strengthen the dollar. But here's the kicker. You're the one that's paying the price. So in this video, I'm going to break down what's going on, what this is going to cost you, and of course how this can create a potential investment opportunity for you. So please stick with me until the end, that way you can see the whole process. Argentina's economy has been in crisis mode with high inflation, a weak currency, and a bad job market. This is where the Trump administration has sent Argentina $20 billion to help bail them out, with another potential $20 billion on the way. And there are 4 points that I want you to be aware of here. Number one, was this free money that the United States just gave to Argentina? Number two, why did the United States actually do this? Number three, where did this money come from? And number four, how does this impact you? So let's break this down one by one. Starting here, no, the United States government did not just gift Argentina $20 billion. It was a $20 billion currency swap. That means it's a short-term loan where the United States government lent Argentina $20 billion. And in exchange, Argentina gave the United States government $20 billion worth of pesos as collateral, and then Argentina is going to have to pay this dollar back plus interest. Now that's going to sound very weird. Why the heck would Argentina want to do this currency swap? Isn't it the exact same thing? And the answer is no. Remember, the United States dollar is the world's reserve currency, and what that means in practicality is a lot of trade in the world happens with the United States dollar. So when Argentina wants to buy things like energy or other commodities, they need dollars to do that. And the Argentinian economy is running out of dollars. So they need these more dollars to prevent their currency from collapsing. And this brings us to point number two. So why did the United States now come in and lend Argentina $20 billion? Is it charity? Well, no. It's for control, because China had originally given Argentina a $5 billion currency swap, because China's hoping that if we can help out Argentina, Argentina's going to become more favorable to China and the Chinese yuan, their currency. And this is where the United States said, we don't want China to come in and be more friendly with Argentina, so we're going to step in and do more than China. The ultimate goal with this is to keep Argentina on the dollar system and to prevent China from expanding their reach into South America. So if it's not apparent, we have an economic/currency war going on with China. Right now, the United States dollar is the world's reserve currency. It is the strongest currency in the world. It is backed by the strongest economy, the strongest military, but certain countries like China don't like that United States dominance. Then on the other hand, you have the Chinese yuan. This is growing, but it doesn't have the same stability. It doesn't have the same trust globally that the United States dollar has. And this is where China is trying to do whatever they can to try to be in first place and beat the United States government. This is one of the reasons why China has been working to buy up more gold at record speeds as a way to strengthen their currency to be able to compete and beat the United States dollar. And that's also why China stepped in to help Argentina as a way to kind of push Argentina away from the dollar, because that would help weaken the dollar. Remember, our dollars here in the United States are not backed by any precious metal like physical gold. It's backed by a promise that this dollar has value. And it has value because, well, that dollar is backed by the United States government, the strongest government in the world. It's backed by the United States economy, the strongest economy in the world. It's backed by the United States military, the strongest military in the world. But if we start to lose the dollar dominance, now all of a sudden the dollar doesn't have as much buying power, and that could not just hurt the value of the dollar, but that would hurt our entire economy, which is based around that dollar. That's why it is so important for the United States government to keep that dominance, and that's why China wants to be in first place, because if their currency is stronger, well, then they're going to be able to do a lot more things that they can't do right now, such as creating more currency and investing more in their economy, because the United States government has been taking full advantage of being the world's reserve currency by printing and spending a lot of money to continue stimulating your economy, even though the United States dollar doesn't have a growing amount of collateral, meaning value, like the economy or our gold, versus other countries are trying to now take the United States' place. Now, this is why, again, it's very important for you to be an investor, because the person that wins in all this equation is the investors. And again, I have a brand new free investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before they hit the headlines. I'll even show you the exact framework that my firm and I use to research investment opportunities before they hit the headlines. Plus, as a bonus, they're also going to get access to Market Briefs, which is my newsletter for investors, completely free, complimentary. So if you want to get the investing masterclass and Market Briefs all for free, all you have to do is register, and I have the link for you down in the description below. This brings us to point number 3. Where did this $20 billion come from that the United States lent to Argentina? Because the United States government really only has one source of revenue. It's tax dollars from taxpayers. And normally, if the government wants to spend money, it has to get approved by Congress. But this $20 billion loan was not approved by Congress. Instead, this $20 billion loan came from something called the ESF, the Exchange Stabilization Fund. This ESF was created back in 1934 during the Great Depression as a reserve fund to help stabilize currencies. More specifically back then, it was to stabilize the United States dollar because remember the Great Depression was a very crazy time for the United States, and now the ESF is being used to help stabilize the Argentinian currency and hopefully strengthen the dollar. Now the reason why some people have concerns about this is because the ESF doesn't have as much visibility or oversight, so there's concerns about, well, what is that going to mean for taxpayers because the dollars are going in there from tax dollars. And it's not like the United States government has an extra $20 billion laying around somewhere. In 2024, the United States government generated around $5 trillion in taxes, and then they went out and spent around $6.8 trillion in taxes, which means, yes, we had to borrow around $1.8 trillion just to pay our bills in 2024, and we're probably going to have to borrow even more than that in 2025. So the United States government is not making enough money to pay our bills, let alone bail out other countries, and this is why some people have concerns because, well, us borrowing more money has a cost too. The fastest growing expense for the United States government is not our military, it's not infrastructure, it's not technology. It is interest payments on all of our debt. We have $38 trillion worth of national debt. And the United States government has to pay interest on that debt every single day. So those interest payments are now being paid by your tax dollars, which means more and more of your tax dollars you're paying are not being used to fund services for you. They're being used to pay back yesterday's expenses. And this is the concern that people have. If we're using our tax dollars to bail out foreign countries, couldn't we use our tax dollars to benefit us more? And this is where the United States government is saying, yes, but the problem with that is if we don't bail out this other country, China's going to get stronger, their currency is going to get stronger, and that's going to ultimately hurt the United States dollar. It's going to hurt our economy to cause more problems. So it's kind of like being between a rock and a hard place. And this brings us ultimately to number 4. What does this mean for you? Now, if you've been watching the financial news at all, you probably know that gold prices have broke new record highs in 2025. Now, there's a lot of reasons for this. People are concerned about the dollar, people are concerned about inflation, but ultimately the price of any asset depends on supply and demand. When you have more buyers than sellers, the price of that asset goes up, whether it's gold, whether it's a house, whether it's a stock. And one of the biggest buyers for gold right now is actually the Chinese government and the central banks because they are working to strengthen their currency. So, what does that mean in practicality? Should you buy gold? Well, that's up to you, but what I'm trying to say is just understand that in the gold market, part of the reason why gold prices have boomed so much isn't just concerns about the dollar, it's also because you have central banks around the world like China that are working to buy more gold, which is helping to boost the value of gold. Number 2 is understanding Argentina's economy, because Argentina's economy is very big in the lithium business. They're part of the lithium triangle. So if the United States is helping to stabilize and strengthen the Argentinian economy, that could mean more investment into Argentina's lithium investments and dollar-based trade deals for critical minerals. So what does that mean? Well, there are companies out there and ETFs that give you exposure to lithium miners. And if these lithium miners have more exposure to Argentina, they could see more benefit as the Argentinian economy starts to stabilize and potentially grow because they might be investing more into those miners in Argentina. And the third investment opportunity, which is also a little bit tricky, is also thinking about bonds. Now remember, a bond is a loan. And you can lend money to the United States government because we know that the United States government has $38 trillion worth of debt. But you can also lend money to the Argentinian government. Now, why would you lend money to the Argentinian government? Well, if they're being backed and supported by the United States government, that could add some stability there. Now, of course, the Argentinian government is going to be much more risky to lend money to, which means you're going to get a higher rate of return. So if you were to lend money to the Argentinian government, you'd get a higher rate of return, assuming that you get paid, which you might not. But if the United States government is backing them, well, now you just have a higher chance to get paid. And it is difficult to directly invest into Argentinian bonds, but there are alternative ways to invest into their bonds as well. You can invest in emerging market bond funds, which give you indirect exposure to Argentina and other countries. For example, I'm not telling you what to invest in, I just want you to think like an investor. A couple emerging market bond funds include EMB, EMLC, which give you exposure to bonds from emerging markets, which include Argentina, but other countries as well. So, could this be an investment opportunity for you? Maybe. I can't tell you what to invest in. I'm just a random guy on YouTube. But what I want you to understand is that every investor is thinking about where is the money moving. And we know that right now, the Argentinian economy is struggling. And this is where foreign countries like China and the United States have stepped in. Now, the United States is stepping in harder than China, not just for charity, but as a way to kind of oust China and keep Argentina's relationship with the United States and the United States dollar. What's going to ultimately happen, we don't know, but this can obviously create investment opportunities as well. Again, I have a free investing masterclass for you down in the description to help you find those types of investment opportunities, so you can check that out if you'd like. But you have to understand, investing is risky. However, there are things happening. We know that the Chinese government and the Chinese central banks are working to buy more gold to strengthen their currency to beat the United States. We also know that the Argentina economy relies heavily on the lithium business. And there are lithium miners that could benefit if the Argentina economy starts to grow and they start to invest more into their economy, which includes mining lithium. And we also know that the Argentina economy has bonds. And you can lend money to the government, which is risky, which comes with higher potential returns, which you might never get paid back. But if the United States government starts to bail out their country, that could help them pay back those bonds as well. This is where I want you to start thinking like an investor. Of course, investing has risks. I hope you got value out of this video. If you did, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor. That way we can continue to spread this type of financial education. Thank you. The Fed just announced that they're going to end quantitative tightening come December 1st. In plain English, that means that the Federal Reserve Bank wants to start printing money and boosting markets again as we go into 2026 as a way to stimulate the economy. This economic shift is going to affect everybody. It affects the stock market, it affects the value.